Welcome to Build Wealth Now News. I am your host, Billy Bob, and today we are analyzing a company that is critical to the future of AI in the United States. Currently, power generation is the Achilles heel of the United States. In the U.S., data centers are expected to drive roughly half of the overall increase in power demand to 2030. According to the International Energy Agency, IEA. In base case projections, the IEA expects U.S. data center power consumption to increase by 130% from 2024 to 2030. For context, a typical hyperscale AI data center uses the same amount of electricity annually as 100,000 homes, according to the IEA. The energy consumption of large data centers can equate to millions of homes or major U.S. cities. Securing reliable power is a key gating factor in data center development. While renewables and natural gas have a role to play, nuclear stands apart for its reliability and carbon-free power generation. Nuclear's clean qualities are particularly attractive as tech companies strive to reach environmental goals. In the near term, hyperscalers are contracting with existing nuclear facilities. As always, we have our reliable Sarah to do some digging for us. Sarah, what can you tell us about Cameco Corporation?
Billy, our northern neighbor Canada is the answer to our AI supremacy dreams. It is critical to our nuclear power generation industry. In May 2025, President Trump signed 4 executive orders aimed at accelerating U.S. nuclear power generation with the goal of quadrupling capacity to 400 gigawatts by 2050. AI data center is an energy-hungry beast. Without the energy to power it, dreams of dominating the AI industry will remain just that. Cameco Corporation is a Canadian company based in the province of Saskatoon. It operates through 3 segments: uranium, fuel services, and Westinghouse. It was founded in 1987, and so it has been around the industry for nearly 40 years. It is just the company that produces the right kind of processed uranium for the small modular reactor, or SMR. Renewables such as wind and solar just can't meet the industry needs. Solar and wind are intermittent. You can't have ChatGPT going dark because a cloud passed overhead.
So what's the answer? Coal? Gas? I thought we was going green.
Exactly why SMRs are the only viable solution right now. They're clean, scalable, and critically dispatchable. You flip a switch, you get power 24/7, and they run on uranium. Which brings us to the mother lode. The entire energy sector's in a bull market, but uranium stocks, they're tearing the roof off. Cameco's up 150% in a year. But Billy Bob, here's where most investors get skunked.
Skunked? Don't leave me hanging, Sarah.
They chase the hype without checking the business quality. They see uranium equals AI energy and YOLO into any ticker with U in the name. But not all uranium companies are created equal. That's why at Build Wealth Now News, we use our business quality checklist. 8 sections that separate the wheat from the chaff. No fluff, just cold, hard metrics.
All right, lay it on me. What's the first thing you look at when some fella says buy CCJ?
Section 1, profitability and capital efficiency. We ain't just asking, are they making money? We're asking, how efficiently are they turning capital into profit? Key metric, ROIC, return on invested capital. If a company's ROIC is below its cost of capital, it's destroying value even if profits look pretty on paper.
ROIC sounds fancy. Break it down for the ranchers watching.
Simple. If you lend me $100 to buy a bull and that bull calves sell for $115 after costs, that's 15% ROIC. I created value. But if I spend that $100 on a fancy tractor that barely helps, maybe 5% ROIC, I destroyed value. For Cameco, their ROIC is only approximately 6% right now. Why? Because they're ramping up mines. Big upfront costs. But here's the hope. Uranium's at $82 per pound. Their cost is $21 per pound. If prices hold, ROIC will jump to 20% plus. That's the bet.
So ROIC tells us if they're actually good at their job, not just lucky with prices.
Exactly. Next up, cash flow quality. We check FCF margin, free cash flow divided by revenue. Why? Because profits on paper can be faked. Cash can't. Cameco printed $693 million in FCF last year on $3.14 billion revenue. That's a 22% FCF margin. And get this, their FCF was 4 times their net income. That means their earnings are real cash, not accounting tricks. For a miner, that's gold-plated quality.
I like cash. What about them balance sheets? I heard some miners are drowning in debt.
Section 3, balance sheet strength. We look at debt-to-equity ratio and dilution. Cameco's debt-to-equity ratio is a tiny 0.15, basically debt-free. And their share count barely moved last year, 0.14% dilution. Compare that to junior miners diluting shareholders 20% a year to stay alive. Cameco's got a fortress balance sheet. They can weather a uranium dip without begging for cash.
So they ain't gonna go belly up if prices dip?
Not a chance. But here's where we get cautious. Section 4, growth authenticity. Cameco's revenue grew 21% last year. Great. But why? Partly uranium prices rose, but also they ramped production at McArthur River mine. Problem is they just cut 2025 production guidance 17% due to development delays. That's a yellow flag. Real growth ain't just hoping prices go up, it's executing on the ground.
So they talk a big game but stumbled on delivery.
Precisely. Which is why Section 5, economic moat, saves them. Cameco's got the real deal, cost-advantage moat. Their mines produce uranium at $21 per pound. The industry average, $45 per pound. When uranium's at $80 plus, Cameco prints money while others barely break even. That's not luck. That's geology. They own the world's richest deposits. You can't replicate that.
So even if they slip up short term, their moat keeps them safe?
Bingo. But Billy Bob, here's the trap most fall into: ignoring momentum timing. Section 8 of our checklist. Cameco's up 150% in a year. It's extended. If you buy today at $115, you might be catching a falling knife when it corrects. Our rule? Only buy when RS63 and RS126 both cross above 50% on an upward slope. That confirms institutional money's flowing in after fundamentals improve, not before.
So you're saying the business is solid, but the timing might be rotten right now?
Nailed it. Let me summarize Cameco through our checklist lens in 3 columns. Checklist section, verdict, and what it means. 1. Profitability, ROIC. Watch, low now, approximately 6%, but trajectory improving as uranium prices hold. 2. Cash flow quality, strong, 22%. FCF margin. FCF 4 times net income equals earnings are real cash. 3. Balance sheet. Check mark strong, near zero debt. Minimal dilution equals financial fortress. 4. Growth authenticity. Watch, production guidance cut. Execution risk at McArthur River. 5. Economic moat. Check mark strong. $21 per pound cost versus $80 plus price equals unassailable cost advantage. 6. Momentum timing. Caution. Up 150%. Wait for pullback to 90 to 100 plus R. S63/RS126 greater than 50%.
So what's the build wealth now move here?
3 steps. Don't chase. Wait for a 20 to 30% pullback to $90 to $100. Verify momentum. Only buy when RS63 and RS126 cross above 50% together. Confirm smart money's back in. Size small, 3 to 4% of portfolio max. This is a commodity bet, not a pure growth compounder. Uranium's volatile.
And if McArthur River gets fixed,
that's the catalyst. If Q1 2026 production guidance returns to 18 million pounds, ROIC jumps, FCF explodes, and this thing could 2 times from current levels. But Billy Bob, remember our mantra? Fundamentals open the door, momentum walks you through it. No matter how shiny the thesis, if the RS metrics ain't aligned, you wait.
Sarah, you just saved 1,000 ranchers from buying the top. Remember, folks, build wealth. Now don't mean buy now. It means buy smart. Sarah, any final wisdom?
Just this. AI data centers will need SMRs. Uranium is the bottleneck, but the winner won't be the company with the best PowerPoint. It'll be the one with real cash flow, a cost moat, and clean execution. Cameco checks 2 of 3 boxes today. We're watching for that third. And when it clicks, that's when we strike.
Sarah, thank you. Folks, hit subscribe, ring the bell, and tell us in the comments your thoughts.
Thank you to all our viewers for staying with us. See you all in our next market summary.
Build Wealth Now News is dedicated to research the businesses behind the stock names. Our research are done with artificial intelligence assistance using the best practices in the industry. Please note that investing carries its own risk, and you should do your own research before committing any stock to your own portfolio. This video is done for educational purpose only.